Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. For those of you that tried to tune into yesterday's technical analysis webinar, apologies. I was out with a cold and I had to move the session to next week. So it's still on the schedule, it's just on another day. With regards to today's session, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense. No one trade is guaranteed to profit. We'll go through some ideas in that regard if we simulate a trade or two. There's some nice tools within our order window in our WebTrader and app that really do assist quite a bit with the risk management side of things. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our WebTrader, which allows you to trade on both MT4 and MT5 accounts, but with the advanced tools that we've built into our WebTrader and app. And our app does the same in terms of allowing you to trade on both account types and with all of the advanced tools that you'll see in the WebTrader. Now, if we log in here in the upper right, we'll find ourselves in our WebTrader platform. Just a brief overview of the past couple days in terms of fundamental news. You might have noticed that the stock market in general, the stock markets around the world, the major indices have been pretty bullish this week, and in particular the last 48 hours or so. A lot of that is related to some economic data that came out of the US showing inflation slowing down a bit more than expected. Both the PPI data, which is the producer price index, and also the CPI data, the consumer pricing index, shows signs that inflation is really under control quite a bit more. And that leads to optimism for a couple different reasons. One being that it's a sign of a healthy economy, not to have out of control inflation, obviously, but also anticipation that if inflation really is starting to drop faster than expected, if that continues, some of this talk about freezing interest rate cuts in the US may go away, and maybe the FOMC committee and Jerome Powell will see fit to cut interest rates further sooner than expected. If indeed these numbers continue to show inflation, inflationary data in general dropping faster than expected. And so each time we see a bigger slowdown than expected with the CPI and PPI data, specifically out of the US, we see quite a response globally in anticipation of, maybe rate cuts are to come further in the US, which then could spur further business growth, help people out with buying houses with lower interest rates, credit cards with lower interest rates, etc. And on the business side, business loans, business growth is made cheaper with lower interest rates. And so we have had that bullish effect the past couple of days right into today, if we take a look at some different instruments. Now, that also then serves to weaken the US dollar a bit to make it more bearish. If there's anticipation that, hey, maybe rates could come down sooner than we thought in the US, so that serves maybe to be a weakening pressure on the US dollar, allowing maybe the euro, the Great Britain pound, etc., to rise against the USD a bit easier, just as the stocks are rising against the USD a bit easier. Okay, so we'll keep that in mind as then we can take a look at the economic calendar to see what's the latest news that came in today. Now, the US announcements don't occur until a couple hours from now, but we can see what has come in out of the European Union or the UK, etc. So if we go to the economic calendar, and I think we can jump on a chart or two as well once we look at what's already come in today. If we look at today's date on the economic calendar, which I already have chosen, we can take a look in particular out of Great Britain. Industrial production worse than expected. It was expected to go up from negative 0.6 to a growth of 0.2%. It stayed negative at 0.4%. So And so there were multiple numbers out of the UK that were worse than expected. GDP numbers as well out of the UK expected to show 1.5% growth with only 1% growth. And then the opposite, if we look out of the European Union, for example, balance of trade, better than expected by a long shot. Instead of 6.8 billion last time, the expectation was to be 7.8 billion, so a small increase. It jumped to over 16 billion in the positive direction for balance of trade. That's a nice sign for the European Union. So that in general, if we look in the past, what has this effect had on the euro if the balance of trade has been better than expected? So if we pair it against the USD, for example, and we say this comes in above forecast, well, then we see 100% of the time a bullish move, upward movement. Not once in the recent history, and this really looks back maybe the past year, every single time that the numbers came in better than expected on balance of trade, the euro went up against the USD with an average range movement of near 30 pips. Okay, if it had come in below forecast, it's the opposite. 2/3 of the time the euro dropped, but we already know it came in above forecast. So in the 4 hours following that announcement, you would expect the euro to climb based on this data with a range movement of maybe near 30 pips. So this tool helps us to analyze the past announcements for balance of trade. And now we see how it came out this time, really just an hour ago. So we could take a look at the live chart, maybe pair it against the pound because we know the pound had bad data, okay, today, which should work against the pound strengthening. And we can see from the history when this came out the way it did for the euro tends to strengthen, not just against the USD, but if we look at the pairing against the USD, when this came in above forecast, up 100% of the time against the pound. If we can find it, there it is, Euro GBP, also up the majority of the time, 75% of the time, 3 out of 4 times up. Okay, so we know the tendency is there then for the euro to climb against the USD, against the pound, when this comes in the way that it did in the hours following the announcement. So now we can go to the live chart and see, can we find an entry point we like, or what's the signal right now? So if I look at Euro GBP, first of all, is there a signal, technical signal? There is. Okay, this symbol means there's a signal. So what's the prediction from the signal? It says to buy. We already were thinking based on the GDP number or the trade balance numbers being positive for the euro and the past history that the economic calendar showed us from the past announcements that the euro climbs most of the time after that in the 4 hours that follow. And then also knowing that the pound had negative announcements today, it would make sense to buy on the euro. Now the signal saying that that's what you should do. It's above the pivot level. Here's the pivot level. As long as it stays above this price, it's a buy signal. And they're saying take profit near these resistance levels up here. Okay. We can draw those lines out on the chart. If I want to go to smaller candles, maybe 1 hour candles. Okay, we see the initial climb, a bit of a pullback. So that pullback could give you a nice entry point, potentially. The take profit suggestions are up at 84.65. Let's draw a line there. 84.65, that's up. We need a larger candle. Let's go to 2 hour candles. Okay, 84.65 is here. So it's the top of this wick basically that it hit and dropped. So it's serving as a resistance level here. Let's go to 4 hour candles. Maybe we see the resistance level back in time further. The larger the value of the candle, the further back in time you can see. Let's go to 1 day candles again. Okay, now we start to see on the candles where we drew this line. You see where this wick hit and dropped. You go back this way, and there's the resistance right here on the one-day candles in the past. It hit and dropped. So this is a price level that in the past, when the last time it reached, it served as resistance and dropped. It got near here and dropped. And so then again here and dropped. And so now this signal is here. So we're below the resistance level. And because of the recent fundamental news, it seems like maybe the euro should climb against the pound. From a technical perspective, on the short-term candles, we have a support level in the signal down here at 84.12. We want to find 84.12. That's right about here. Okay, so here's our support level from the signal. Here's our first take profit suggestion from the signal. And we see on the one-day candles that that's a resistance level from quite a ways back. Okay, so now we can go to the smaller candles once again. And we can decide, do we like the entry point if we were going to buy on this? Okay, it looks like our pivot level is pretty close. Okay, it looks like it's trying to trend towards the pivot level. And if it drops below, then we might say to put our stop loss. If it breaks that support level that was the pivot level, you put your stop loss down here. Okay, because the signal says that it's a sell signal if it drops below this price. Okay, and this is a support level from the past as well, because you see this was resistance. And then once it went above, it became support at this level. And it's support here again. Okay, so let's assume you wanted to buy with this signal. And you like the fact that it pulled back some in a greater upward signal. So then what we can do is risk manage this trade. I think I'll go back to a larger view, the one-day candle view, so that we can see the whole setup, where the take profit should be and where our stop loss should be. And so if I'm buying on this, I can say take profit just below 84.65. This is our resistance level up here. So let's say 84.63, something like that, just below the resistance. Okay, maybe 84.62. Okay, so take profit, 84.62. And then my stop loss should be below 84.12 according to the signal. Okay, so 84.10 maybe for stop loss. Okay, now I get an idea of my risk reward. I see I would make 6,400 plus and risk 3,094. So a little better than 2-to-1 ratio, potential profit to risk. Okay, maybe I'm comfortable with this setup. Now I need to take a look and say, what trade size is right for me? Because maybe I don't want to risk 3,000. Maybe I want to risk closer to, I don't know, 600, which would be about 1% of my balance. So you should know the amount you want to risk per trade, and could be 0.5%, 1%, 2%, whatever that is. So let's say I want to risk 1% of my balance. That would be about $584. So now I can start changing the trade size, the lot size. If I do one lot, how much am I risking? 202. If I do 2.8 lots, I'm risking 553, less than 1%. 2.9. I'm risking 573. I'm zeroing in now, 2.95. Okay, 590. A hair over 1% risk. Okay, now it's moving, so now it's under 1% risk. I'm risking 576. So to make over almost 1,300. Okay, make over 2% on my balance, risk less than 1% or about 1%. Okay, so I've got my risk management done. I've got my directionality determined by the fundamental news, and I also got my entry points and exit points. I got some help on that from the technical signal that was there that happened to agree with the fundamental direction that we're simulating here, which is for the euro to be bullish. Now, let's take a step back. How did we determine on directionality here? We looked at the news announcements that came in on the economic calendar, the economic numbers that came in. We saw negative numbers come in out of Great Britain. We saw positive numbers come in out of the European Union. We even used the tool on the economic calendar for that European announcement. And that tool showed us that when that number comes in the way that it did, that in the past year, the data shows 100% of the time the euro climbed against the pound, or against the USD 100% of the time, and against the pound 75% of the time. Okay, so we did a setup against the GBP with the euro because the past data from the economic calendar supported doing it based on how the economic announcement came out today, and also because the technical signal was in that direction as well. Okay. So we combined some information to make an educated trade. Now, what about the Euro-USD pairing? We could have done that. It also showed the majority of the time, and it was actually 100% of the time, that the euro climbed against the USD when that announcement came in the way that it did. So if we look at Euro-USD, we can see, is there a signal? There is. It's a buy signal. Not surprisingly, it's a buy signal. We could follow the same procedure we just did with the Euro GBP. We can draw lines at the suggested take profit levels for this buy signal. I drew lines last week. They're probably near the same locations. 103.10. No. This is off because these are one-day candles, and the chart has moved a lot since then. So let's delete these lines so as not to confuse the matter. And then we can take a look at this current signal, maybe on smaller candles to get a closer look. Okay, and we can see that the current signal says if it drops below 102.70, then it's a sell signal. So 102.70 is down here. Okay, so if it drops below this old support level, resistance level, see it was resistance, 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 and then it blew above that resistance with a breakthrough candle. So this should act as support, is what the signal is saying. That's this pivot level here, is this support level, which is the old resistance. Okay, so they're saying as long as this movement stays above this line, it's a buy signal. The take profits are up at 103.10. Okay, makes sense why it's there. Okay, you see this was an old resistance, 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 and then it dropped down. Again here, resistance, resistance, tested it once and went down. And so they're saying if this does go up, it might have trouble breaking this level, at least temporarily anyways. So 103.10 is the first resistance, and then they're saying 103.30 is the higher resistance level. It's probably this one here. Indeed it is. 103.30, just trying to get it. It's the top resistance here. Okay, so we see this resistance level here is the next spot where they see that this might have trouble breaking this line here. Once it broke below this price, excuse me, we went up and had resistance, resistance. So this signal says the first resistance level you might take profit is here. The second level is here. That's these lines within the signal. Now, that's the technical setup. The question is, do the fundamentals support buying here? It seems that they do, because yesterday there was, and the day before, CPI, PPI data out of the US gave multiple reasons for the USD to weaken. Okay, the numbers came in lower than expected, and indeed the USD has weakened since then. So that hasn't changed yet. There aren't any new announcements until maybe a little later today out of the US, which could swing things. But for the short term, between now and those next announcements out of the US in a couple hours, a short-term trade here with this signal makes sense fundamentally, that the euro may rise towards these resistance levels leading up to those announcements later today. Now, the other side of that is not only are there economic announcements from the past couple days giving the USD reason to weaken, we just looked at the announcement giving reason for the euro to strengthen. And the economic calendar showed that 100% of the time in the past, the euro has climbed against the USD for the data that was analyzed in the economic calendar for the trade balance data. So we can then say fundamentally and technically this looks like a buy move. And if you agree with that, then you go ahead and make the trade. It's always nice when the technical signal lines up with the most recent fundamental news that we've looked at. Okay. And so now if it's a move you want to make, you just risk manage the move now within the order window, just like we did with the GBP USD. So we're diversifying here, doing in these examples about a 1% risk on my account with Euro GBP and about a 1% risk on Euro USD. Why is it good to diversify that way? Sometimes, like I said, there are announcements coming out of the US in a couple hours, so I'm more pressed on time that I probably want to get out of this trade before that new data is released, because it could make it go flying the wrong way depending on today's data comes out of the US. Whereas the Euro GBP trade, maybe I can be more patient because the data out of Great Britain already came in. I'm good until tomorrow. If there's any new data coming tomorrow out of Great Britain, maybe can be more patient with that trade. So I'm diversifying a bit with the time frame that I might want to get out of on this one compared to the Euro GBP, but the directionality is the same because the fundamental news is supporting it. So right now I'd say, where would I take profit? 103.10 makes sense. That's the first resistance level. And since I'm looking for a shorter term move, I won't go with the higher number on this one. Stop loss below the pivot level, which is this old resistance level, which should act as support now, at least temporarily. So 102.68 might make sense to get below that. Okay, so risk reward is still nice. It's not 2-to-1, but I have better potential profit compared to risk, even with targeting the first resistance level and not the second. So I'm being not greedy with my take profit, still have better potential profit than risk. Now I just need to adjust my trade size so that I'm risking the amount I want. I'm risking with 3 lots about 1% of my balance, a little bit more, a hair over, but better profit potential than risk. And then I'm ready to go. I put that move in action. So now I have 2 trades running based on the information that we looked at here. And so here's my open trades that are running. And it looks like the Euro GBP trade started out a little bit negative here. There was another one that I had running, and we'll see over time. Most of that, usually when you first start out, it's the spread. You just have to overcome the spread. You always start a little negative. And so early on, don't be scared when you first open a trade. If immediately you see some negative, it makes sense. And you give it some time to move. Okay, so any questions, comments on anything? I'll pause for a moment before we look at anything new. Okay, I don't see any questions popping up, but if I see any, I'll address them as I see them. Okay, so, we looked at announcements that already occurred and placed a couple trades off of that. What's really nice is to see them as they come in, if you are available within your schedule. And so, for example, these announcements coming out of the US today, we've got some high-level announcements ranked high importance. Retail sales, manufacturing data, jobless claims. Okay, they all come in at the same time at 3:30 my time. You have to look; it'll show your local time here. It's just in about 2 hours time. Okay, a little bit over 2 hours from now. And what we can do is preemptively look and see how has it moved in the past based on how these numbers come in. And then be ready to trade as the numbers come in, already knowing, well, what has happened in the past. And then once we see if it comes in better or worse than expected or as expected, we'll then know in advance which way we want to trade based on how that data comes in. If you can catch the entry point you like, and sometimes you even have a false move the opposite way before it might go the direction you expect it to go. So you can a lot of times catch a nice entry point already knowing the direction that you want to trade in advance. And so let's look at the retail sales, for example. And we can use any currency pairing with the USD in this case that we want. You can look at different time frames. I'll leave it on 4 hours after the event. If this comes in with retail sales below expectation, let's say they come in lower than expected, like some of this data yesterday and the day before out of the US. Again, you see the USD weakens in response to that. 75% of the time, the euro climbs significantly with over 37 pip average range movement in the hours, in this case 4 hours following the announcement. Okay, you might say, yeah, but that's after the data came in. Maybe they're already moved before I trade. You can look and say, okay, in the first 5 minutes, how has it moved? Okay, in the first 5 minutes, less than 20 pips range movement. And certainly it shouldn't take 5 minutes to place a trade. Might be able to trade in the first 1 minute, right? First 30 seconds after you see the data. So perhaps you catch some spikes down, you catch movement that's up very little, in this case 20 pips or less, and after 4 hours it's showing you the average range movement is over 37.5 pips. Okay, so if you could get in with a spike down even with this type of percent data from the past that it goes up, if it comes in below expectation on the retail sales, then you've got something there. Okay, and what if the opposite, it comes in above forecast? Look at that, 100% of the time, the USD strengthened in the past year or so. Okay, each time that this has come in better than expected, above forecast for retail sales, it's moved down and in a big way. Over 46 average range movement, 46 pips, and 100% of the time after 4 hours, they're down. What about the first 5 minutes? Okay, also down, but down half as much, 20 pips, less than half. And again, it shouldn't take 5 minutes to place a trade. You could have it already ready to go with your lot size, everything picked, and just waiting to press buy or sell and set up your stop loss and take profit, and you're ready to go. And so very powerful data here showing an inverse relationship with retail sales or a direct rate relationship in this case, that as retail sales come in above forecast, I take that back, inverse relationship, the Euro USD drops. Retail sales higher than expected, Euro USD drops. Retail sales below expectation, majority of the time, Euro USD goes up. Okay, it's a direct relationship with the strength of the US dollar, inverse relationship with the direction that the euro moves against the US dollar. In any case, it's an obvious relationship here, and this is the type of thing you could be ready for if you can watch these numbers come in out of the US, for example, for retail sales. Okay, and we could analyze the others, initial jobless claims, manufacturing data, same idea though. Okay. We could go ahead and look at other announcements today. We could look at announcements tomorrow. And really, my suggestion is, if you're going to trade with this strategy off of the economic calendar on upcoming data, over the weekend when you have some time, Saturday, Sunday, you can look through the upcoming week's high-level announcements and look at the percent data like we just did for this one later today out of the US, and find which ones have the strongest predictability based on how they came in the past. And you can be ready to trade on those if you know they fit your schedule. Okay, and so we could go through and look at examples for tomorrow, retail sales out of Great Britain, inflationary data, inflation rate data out of the European Union, etc. And you'll see similar predictability for these announcements based on whether they come in above expectation, below expectation, or at expectation. And you'll know which ones show the strongest predictability that you might be interested in trading on after seeing the data as it comes in. Okay? Any questions, comments before we leave the economic calendar? Again, if I see questions pop up, I'll address them as I see them. One more tool that I want to look at real quick is the Market Buzz. This is a tool that allows you to find the most recent information online from business websites, social media, etc., all in one location. So whether it's a particular stock you have interest in trading on, a particular commodity, whatever it is, everything that we offer for trading, you can find in here. Indices, currencies, etc. Okay, I find it most useful with stocks because there's more specific information maybe about a particular company that's more powerful than maybe searching Euro USD. It's affected by so many things. When you're looking at a currency pairing, for example, you could have a lot of varying information. But when we're looking at stocks, I find it to be the most powerful. Not that it isn't useful. If you're looking at gold or some other instrument, you might find some direct information about that. But stocks, I tend to find more specific information about, shareholder comments, earnings reports, announcements about a new product, etc. That can really help you predict which way you might want to trade on something. For example, I know there's news about the banking sector lately that, wow, they've been doing good. And so there's a lot of bullish information. We see the technical trend here in the Market Buzz. So we get the technical analysis as well. Price may rise 5.5%. Okay, that doesn't surprise me because I already heard positive fundamental news about JP Morgan and the banking sector in general. Then you could look here, besides expanding the technical signal and looking where are the resistance levels that are expected in the take profit recommendation, just like we analyzed the other signal on the euro pairings. We also can look at the signal here for any instrument that it's offered on. So in this case, JP Morgan. We also can then scroll through and look for articles that are about JP Morgan. Okay, and if you find something that makes you believe that it's good news or bad news, and that can help support your decision about whether to buy or sell on a particular instrument, in this case, JP Morgan. And so you can scroll down and it timestamps it just from a few hours ago. All of these links came in, all of this information. JP Morgan Chase & Company has 6.49 million position in Tesco Company. Okay, I don't know if that news will sway you, but you could click on the link and bring up the article and read about it. Sometimes there's news here that doesn't really pique your interest. Sometimes you see articles that does pique your interest and help you decide whether you want to trade on something. Here, Wells Fargo keeps their buy rating on JP Morgan. That could be interesting. People listen to what Wells Fargo has to say a lot of times. So I click on this. Here's a summary of it. I can click on the whole article, and you can understand that a lot of people will read this and see, oh, Wells Fargo gives a buy rating. You can read about why. Here's the whole article. And if Wells Fargo convinces you that, hey, you should be buying on this, then maybe that helps you make a decision to go with this technical trend that the prediction is that it will rise as well. Okay, and you can have multiple articles as you scroll through here that are within the past 3 hours, 5 hours, 10 hours. Here's 10 hours ago. Earnings results, inflation data should rejuvenate bank stocks. This is what I was talking about that I heard yesterday. So these earnings results, and this article is talking about the fact that these numbers that have come in, it gives an expectation that bank stocks should go up. So here's another article you can read and understand, oh, maybe I want to buy on bank stocks, okay? So you get all of that most recent information from the Market Buzz in terms of fundamental news, and now it's easier for me to trust this technical signal maybe, okay, to follow this signal. So maybe when the US market opens today, if there's a pullback or something, but not below the support level, if it doesn't establish a downtrend in this signal and stays above the pivot line, but it hasn't reached the take profit suggestions, and maybe I'm interested in buying on this. Okay, so very easy tool to start writing down a list of things I might be interested in buying or selling on, in this case, when the US market opens. Okay, so these tools make it very, very simple to get going on trading strategies that include fundamental news and also can combine technical signals along with it to solidify whether you want to buy or sell on something. okay? Rather than just trading on a gut feeling or guessing, that sort of thing. Any questions, comments before we end today's session? Okay, well, great. Thank you all for attending the session. I appreciate it. My next session will be next week, assuming I stay healthy now. My next session will be next Wednesday evening, 6 p.m. UK time for the technical analysis webinar. All right, good luck trading today and the rest of the week, and I'll see you all next week. Bye for now.